it didn't exist, then billions and billions of dollars of capital from the traditional finance markets wouldn't be invested in Bitcoin because they can't buy or hold the underlying crypto asset. They can only buy securities or bonds or options or other instruments. So we become an institutional gateway for crypto exposure by all types of investors. And my real aspiration now is, if you really hate Bitcoin, I want you to love us. Like, we're the perfect instrument to short, right? Because I promise you I won't sell it, right? We're going to be levered long Bitcoin. And if you don't like it, or if you just want to hedge it, you get to sell our stock or sell puts or buy puts, right? And the worst thing I could do is to take your side of the trade or to interfere with what you're doing. So I think part of MicroStrategy's rise to prominence in the space is we have been laser-like focused. We're very consistent. We're very transparent. We're going to buy Bitcoin, never sell Bitcoin. We're going to borrow money intelligently. If you like Manhattan, and if a company said, I'm going to borrow $5 billion at 1% interest, and I'm going to develop real estate in Manhattan, you might think that that's the kind of company you would like to invest in. But if you hate Manhattan, and we're 150% exposed to Manhattan, you get this investment thesis, like, that's the company I want to short. And the most important point in the marketplace is you just have to be very pure, true to your focus, have integrity and consistency and transparency, because it's not my job to trade, hedge, arbitrage, or construct that portfolio. There are guys with hundreds of millions or billions of dollars in a Bloomberg, and that's what they do every day. So my contract with them is, we're going to do what you can't do. We're going to buy Bitcoin, hold Bitcoin, and we're going to issue equity, and we're going to issue debt instruments, and you can't do that. We're a public company, and on the NASDAQ stock exchange in America with the nearly 30-year track record. And we have 16 billion of permanent capital. That's Bitcoin, right? So I can create an equity with 80 or 90 vol. I can have permanent capital. We can stand massive swings because of our capital structure. That's what we can do. What you can do is decide if you want to buy it, sell it, hedge it,
or short it.
Short it.
So let's talk about MicroStrategy's rise then. In the past few days, it hit $43 billion, a 52-week high. All of those functions that you've spoken about are the reasons why you think that your stock can currently command a premium to its net asset value. 43 billion at its high versus that 16 billion in its net asset value being the Bitcoin holdings. Give me the rationale beyond what you've mentioned about those functions for you that you think it may be able to continue to expand to perhaps 1 trillion US dollars.
Because, if you wanted to make it put it simply, we're the only company that can issue Bitcoin-backed bonds. So anybody can buy Bitcoin and have all the downside and all the upside and all the volatility. But what if I want half the upside but no downside? There's a lot of people. If you look at the fixed income market, look at the corporate debt market, look at the preferred stock market, look at the convertible bond market. People in the convertible bond market, they have to buy a convertible bond. I can sell $1 billion of bonds in one day to people that have to buy the bond. They can't buy Bitcoin. They can't buy the equity. So who in the market is the leading issuer of convertible bonds? Well, we are. MicroStrategy, we've issued like $5 billion worth of convertible bonds. And so we've got that credibility. And what's going to back the bonds? Bitcoin. Well, what if I had $50 billion of cash and treasuries and I wanted to issue Bitcoin bonds? It wouldn't work. Why? Because the volatility of a T-bill is 5. The volatility of Bitcoin is 50. The volatility of MicroStrategy equity is 80. If you want to buy a convertible bond, you want to buy a bond from an issuer that has volatility more than 45. You want high volatility. You want high liquidity. And of course, you also would like the Bitcoin upside. If Bitcoin, if it doubles, the convertible bond will provide you a Bitcoin return, but only if it's sold to you by a company that's all Bitcoin. So MicroStrategy's this Bitcoin securities company, and if I want high vol, high performance Bitcoin equity, well, you have to have a company that's 150% Bitcoin. If you want high volatility, high performing Bitcoin converts, you need a company that's backed by Bitcoin. If you want to buy, a bond that pays 100, 200 basis points more than conventional things, you need a company that can sell you that bond that has a way to generate better than that. So there's an entire swap market out there where a lot of people would love to get paid 7% interest, fixed income, retirees. People literally have $100 billion funds and they have to buy bonds that generate fixed income. That's the name of the fund, fixed income. They can't buy Bitcoin. They can't buy the equity. They might not even buy the convertible bond. So MicroStrategy we can generate that bond. And of course, Bitcoin's been going up 50% a year. Okay, so we have crude capital, digital capital on one side. This is 50% with massive volatility. There's a lot of people that would love 10% fixed income with 10 volatility. So how do you turn, high voltage capital into low voltage fixed income? You need a transformer. Okay, so what's the perfect transformer? A company with 10, 20, 30 billion dollars of Bitcoin, and then I sell $1 billion bond here that gives you this percentage and this low volatility, and I invest the money into this, which is high performance, high volatility. And so what MicroStrategy does is we're scraping or stepping down the volatility, and we're stepping down the performance. Now you would think, why would you want 10% instead of 50%? Why would you want that? Well, MicroStrategy's gotten 50% every year for the past 4 years, but we took 50% vol, right? The world's full of people that would rather have 5% and 5 vol, or 10% and 10 vol, or 15% and 15 vol. So in essence, MicroStrategy's opportunity is to be that leading public company in securitizing this asset class and then providing the derivatives, fixed income, high yield, convertible, high performance equity. And you can't really do that if you don't have a public company with permanent capital. You can't do it with an SEC 40, an ETF, or a trust. See, they've got overnight deposits. They can't generate 5 years duration leverage on some kind of preferred or bond-like instrument. So I guess the last metaphor I give you is, Standard Oil created the oil business. So I give you a petrochemical refinery and think about what goes in one side. It's crude oil. What comes out the other side? Gasoline. Why do you put gasoline in the car? Because it's the only thing that works. Kerosene. What do you put that in? Jets. That's jet fuel, right? What? Propylene.
Bitumen goes in paint, or another product that comes out.
All of those petrochemical products come out this side. The refinery does a lot of work, and in comes crude oil. So think of MicroStrategy as we take in crude capital. There's no doubt it's the best performing asset in 15 years. It's theoretically the best form of capital is digital capital. It's just scary to a lot of people. It's too volatile. It's too difficult to manage. So they want someone that can, domesticate it, step it down, package it in safe components, and then connect it into the fixed income market, the high yield market, the convert market, and the public equity markets. And MicroStrategy, we just inadvertently backed into that, because to do what we did, you have to start with a very small company, $1 billion company, and then we become a $40 billion company, and now we're 150% Bitcoin. So if you take another $1 billion company and do what we're doing, you can't catch us. Because at this point, we can grow $5-10 billion a year in capital or faster. You can't catch us if you start with the same thing. But if you take a big company like Google or Meta or Microsoft or Apple, and they took $50 billion, and they bought $50 billion of Bitcoin, well, that would be good for Bitcoin, and that would be good for their shareholders. And if Apple did it a lot, they might add $1 trillion to market cap. But it would be $1 trillion on top of $3 trillion. So at the end of the day, Apple would be an enterprise, 25% Bitcoin, 75% Apple. MicroStrategy is an enterprise, 150% Bitcoin. So how do you create a company which is 150% Bitcoin that can sell billions of dollars of fixed income instruments or billions of equity into the market with a permanent capital base that's going to oscillate, it's going to vibrate with the frequency of Bitcoin, right? That is, I'd love to say we had the idea 4 years ago and that's what we were trying to do. No, we just kind of stumbled onto just a really great business.
I do want to get to Apple and how you perhaps plan to convince companies like that to follow your Bitcoin adoption strategy playbook. But this whole conversion, financial engineering type strategy is often referred to online as the infinite money glitch. But I wonder if it is infinite or not. And if it's not, do you perhaps see it running into more of a supply issue first or a demand issue first? Demand being perhaps there might not be potential buyers of all of those other options like bonds, or supply that if you create too many shares and can make too many conversions from your stock, that existing investors will be diluted too much that you'd then run into a sort of cap with that. Or can this just keep going forever, Michael?
See, the misnomer there is it's not a money glitch. It is a digital transformation of the capital markets. When you have a system that moves from a higher energy state, a more disordered state, to a lower energy state, lots of energy gets given off. Think of steam becoming water. Like, is it a money glitch? It's just steam becoming water and it condenses. What happens when water becomes ice? It's not a heat glitch, but heat. What happens when you add heat? The ice becomes water, the water becomes steam. So if you look at the capital markets, you've got $800-900 trillion of wealth in the capital market, and you've got this wealth. You've got people invested in all these heterogeneous assets. Why did 98% of the companies in the S&P 500 not perform? Right? How come 1% of all the returns come from like 7 companies? Right? What I talked about with, if you study the convertible bond market, someone issues a convertible bond, it takes them 5 years for the investors to figure out whether it worked. And then when they come up with a new convertible bond, it's a different credit proposition. It's very inefficient. Right? If you think about preferred stocks, very inefficient. Junk bonds, very inefficient. Private credit, very inefficient. Fixed income, people get very low yields. What if I'm getting this yield and I'm taking all this credit risk and counterparty risk? So of the 900 trillion in capital in the global capital markets, half of it is just long-term store of value, long-term capital. That is pure capital. People with money just want to keep their money. Rich just want to stay rich. I give you an organization $1 billion in the endowment. You just want to not lose the $1 billion.
Precisely.
Right? So that 450 trillion is invested in buildings that are rusting. It's invested in cars. It's invested in fleets. It's invested in things that suffer from 20th century risk factors. Credit default, war, tariff, tornado,
tax.
Like you had a good business at Kodak and your family had all their money in Kodak, and then what happened? Or you own Xerox, and what happened? Then you own the best business in Ukraine, and then there's a war. That happened. Right? I could give you 10,000 examples of risk factors that destroy wealth. So you've got that 450 trillion on one side, and then you've got 1 trillion digital capital. It's like, well, I had a building. I get rid of all the things that make the building a problem, and I make it an invisible, immortal, indestructible, teleportable digital building.
That'd be cool.
Okay? Well, that's what Bitcoin is. So this thing that people think of as a glitch, it's not that, it's energy flowing from a steam state, from highly disordered, inefficient, bouncing into each other, into a more ordered state, right? It's moving from you're in Africa, I give you $1 billion. I say, go invest in any real estate in Africa, in anything you want, any country, hold it for 30 years. There's not a single thing, that you would want to invest in. And I say, well, would you rather own $1 billion of real estate in Africa or $1 billion of real estate in New York City? Well, you can see you'd rather swap the New York City risk for the Nigerian risk. And then I say, well, would you rather own $1 billion of real estate in New York City or $1 billion of Bitcoin or $1 billion in Cyber Manhattan? There's no mayor in Cyber Manhattan. There's no property tax in Cyber Manhattan. There's no storms. There's no weather in Cyber Manhattan. Everybody lives forever in Cyber Manhattan. You can teleport Cyber Manhattan 60 times a second. You can program it as an AI. So what you see is it's not a glitch. It's simply capital flowing from a disordered economy. Like in Argentina and Nigeria, they have hyperinflation. Okay, so if I happen to be there and I'm selling pesos and buying dollars, and the peso used to be 1 peso to the dollar, and today it's like 1,400 or 1,200 pesos to the dollar. Was that a glitch? Was that
just the market at work?
That's basically the free market. It's capital flows to where it's treated the best. And so if I have capital, in Argentina, I would put it in the U.S. And if I have capital in the dollar, let's take the dollar. 100 years ago in Miami Beach, an acre of land on the waterfront cost $10,000. Today, $10 million. The dollar lost 99.9% of its value against real estate, waterfront property in Florida. Okay, is that a glitch? Right? And the peso lost 99.9% of its value against the dollar in 20 years. Is that a glitch? That's really just capital flowing from a weak asset to a middling asset to a stronger asset. And Bitcoin's advance is capital flowing from 20th century analog assets, financial and physical assets, to the 21st century digital economy. And it's going to go fast early on. It went really fast the first decade. It's been going 50% a year ARR for the past 4 years. But as the 1 trillion equalizes with the 400 trillion, and this becomes 250, when this becomes probably this 450 trillion will become 700 trillion, but this 1 trillion will become 100 trillion. And so as this becomes a fraction of the 20th century economy, the difference between the cost of capital in the Bitcoin universe, which is 50% right now, and the cost of capital in the dollar universe, which is about 12 to 14%, basically that's the return of the S&P. So the S&P sets the cost of capital for traditional conventional assets, and Bitcoin is the opposite. And so Bitcoin is like 3.5 times the S&P, and it's also 3.5 times the volatility. Look at DVOL, Bitcoin volatility, 55 versus the VIX. And so if you look at the two, it's not a complicated thing. It's a thermodynamic idea that any physicist will tell you. This is a hot fluid. This is a cold fluid. I pull up the gate and I mix the fluids. And how hot is the bathtub? It's somewhere in between, right? The temperature's it's gonna be in between scalding hot and freezing cold. And in the middle, if there are some ice cubes in this one, and I have released scalding hot water here, some of the ice cubes are gonna melt, but you're gonna end up with a warm bath, with the exception that there's always gonna be, if you look out 10 years, instead of 50 vol versus 15 vol, maybe it'll be 45 to 40 to 38 to 36 to 32 to 28. This volatility is coming in. This ARR is coming in. Now this comes up because what happens when Apple and Google and Microsoft and Facebook or whatever, when they buy Bitcoin? What happens when you could take the bottom 98% of the S&P 500? If they bought Bitcoin, their performance would start to approach the big tech. And so the performance of the S&P index will move toward Bitcoin as they put Bitcoin on the balance sheet. Bitcoin performance will move toward the S&P as we move from, a 100 to 1 ratio to a 10 to 1 ratio to a 5 to 1 ratio. And these things equalize. But, if you understand it as thermodynamics and collapsing into a more efficient energy state, like, how is it not more efficient to be able to teleport a building 60 times a second between New York and London? Like, that's efficient. Versus your family made an investment in London 30, 40 years ago, and they changed the law last month, and now you're going to lose all your wealth. That's inefficient, right? So Bitcoin is the digital transformation of capital. MicroStrategy is just a business taking advantage of the digital transformation. But if I was talking to Apple, I would say, don't buy back 100 billion of your stock. Buy 100 billion of Bitcoin. It will go to 500 billion. You'll have a $500 billion business growing 20% a year. You'll make 100 billion in investment gains a year. Your investors will look at it and they'll add $1 trillion or $2 trillion to your market cap. And now the company will be valued 60% based upon the operating business, 40% based on the balance sheet, right? And the risk will shift, because the risk in a conventional company is the balance sheet's worthless and the company's valued based upon the P&L. And so if you make $1 billion a quarter, I basically value it at 20 P to E. So I take the quarterly result, I multiply by 80, and I say, oh, you're worth $80 billion because I took 1 billion and multiplied by 80, and the balance sheet's worthless. But the next quarter I say, well, my billion went to zero. Well, that's 80 times $1 billion change. You've got a massive whipsaw. That's why these companies' stocks crash. If the company had $40 billion of tangible assets on the balance sheet, and it was that puts a floor right on the equity, and really what you want is you want a well-balanced company where it's like Harvard University or Yale. They're not valued based upon the earnings of this semester of freshmen entering Harvard. They're valued because they have 18 billion in the endowment, and if they close the university, they're still rich. They have 18 billion in the endowment. So MicroStrategy is just pioneering, it's kind of common sense. Your family wouldn't give away all your money and just say, we're going to work harder. And a university wouldn't give away all its money and say, we're going to raise tuition, cram the classes, cut the teacher's salary, and work harder. But conventional wisdom in finance is your company ought to dividend out its capital. It ought to buy back its stock. It shouldn't actually hold any capital in the balance sheet. And it should just raise its prices and tell its employees to work harder and cut its cost. And that, in a nutshell, is why 99% of the companies in the world underperform the Magnificent Seven, and why they all could benefit by just adopting Bitcoin as their treasury reserve standard.
Wow. Amazing. Okay.